Hey everybody, this is Jake with another video in the technical analysis series. And in this particular video, we are going to look at different types of divergences, especially positive divergence. We will go over some negative divergence as well. But what we are looking at right now is the daily chart of Home Depot. And you can see we have three different lower indicators here. We've got the percent range, we've got the RSI or the relative strength index, and then we have the MACD. So there are really a lot of different ways you can see divergence on the chart, right? So the first one is the Williams percent range. And what divergence is when price is moving one way, but the indicator is moving the other way. So in this case, you can see here the price closed here on September 27th around 205. From here, you can see that we're creating lower lows here. So the price is creating new lows as the Williams percent range is actually finding higher lows here. So every time that this bottoms out, the percent range actually bottoms out at a higher level. And you can see over time, this starts to slope to the upside. And then this sloping to the downside, this is really like the ideal divergence. So in this case, this is positive divergence because the percent range is going up, price is going down. Negative divergence is essentially, when you've got a different type of setup here where let's say that we've got, in this case, let me find one. We've got a higher high here. Notice that we've got a close around 203.32, and then we've got a close here around 206.89. And notice that, we're creating a higher high here on the price, but on the RSI, which is the next indicator we'll look at, we're actually creating a lower high. And notice that this ends up being the topping area for this particular move to the upside, and then we move down. However, it stays in the uptrend and continues to move up for quite some time. Now, another way to look at divergence is on the MACD, and there's really two ways to look at divergence on the MACD. You can look at divergence in this particular way, where you've got the histogram showing higher lows here, and then the price showing lower lows and then higher lows on the MACD. Now, the histogram is essentially a function of the blue, which is the fast, and the yellow, which is the slow. And as the blue and the yellow, the distance between these two get closer or further apart, you'll see that the MACD histogram will get wider or start to move towards what's called the zero line. Now, the zero line is when the fast crosses the slow, and you can see the histogram then goes from negative to positive here through the zero line. So what we can see here is the histogram really starts to move to the upside from this May 14th low here, and then you can see price finds a new low as well. But notice that this is a little different, right? So, the price, it hits these areas intraday at a low, but notice that these actually close at a higher price here. So, we're taking this particular, close here, but then I'm really comparing it to this low here, because these two candles, even though these lows are lower than this candle, these closed up here in the 191 area. This is the only candle that closed lower than this candle here around 188. So that is how you can use divergence with the histogram on the MACD, or you can use divergence in this case with the actual fast and the slow, where you can see that over time from around October 30th, 2018 to December of 2018, when we really started to move down hard in the markets, the MACD, the fast versus the slow, actually started to create higher lows here. And then as the price created lower lows, you could see over time, as this crossed here around December, late December, early January of 2019, this is what really confirmed this move. So, one of the things to really keep in mind here is the fact that, sometimes you want to see something confirming. So in this case, we've got, first of all, the percent range, which is really going to be the most sensitive indicator. So if you're looking for divergence, the percent range is generally going to find this divergence first. For the daily, I like to use the Williams percent range 10, so that's looking at the last 10, in this case, days, because we're on the daily candle. And you'll see here how, notice that the RSI doesn't necessarily find divergence until a little later, and then to confirm this kind of bottom, we have the MACD cross here. So the ideal thing is to really see this divergence on a number of different indicators. So in this case, we've got it on the percent range forming first. Notice how this actually false signals a little bit. So we have the divergence forming. And then once the divergence really forms here on the percent range, that's when, it's kind of time to start thinking, all right, is this going to break out? I generally like to see, a close through the 50, the RSI 50 here. And then, I really like to see the MACD cross. So the nice thing about this is, you can go in and create a condition. In this case, what I really want to know is, I want to know when the percent range crosses above -20, so when it starts to become overbought, but notice how the RSI still has some room to run here. So what I want to do is I want to know when the percent range becomes above -20. I want to know when the RSI breaks through 50, and then I want to know when the MACD crosses fast crosses through the slow to the upside. So what I can do here is go to create alert, and then in this case, let's do divergence materialized, have it expire in, let's say, 25 days. And then my first condition is, as we mentioned, the daily Williams percent range crossed up through the constant level of -20. The next one is the daily RSI, which is right here, the blue, which is the 10, crossed up through the constant level of 50. And then our final kind of confirmation there is finally the MACD fast. So we have MACD fast crossed up through the daily MACD slow here. So now, without having to do any coding, I can actually then go in and create an alert. Anytime these conditions become true, the system will let me know that it's time to maybe start looking at the chart in a little more depth. So this is just really an example of how you can use divergences, what divergences are, and then how you can use TrendSpider to really create an alert and really know if you're breaking down or breaking to the upside through creating these conditions. Everyone's going to have their own conditions. These are some of the ones that I like to use, but all in all, divergence can happen on a number of different indicators, but these are a few momentum oscillators, and the MACD being more of a reversal-trend indicator here showing divergences. So thank you so much. Make sure to comment below if you have any questions, and make sure to subscribe to our page. If you have any questions, hello@trendspider.com is where you can reach us, and all of these charts have been done on the TrendSpider charting platform. Thanks so much, and have a great day.